100% upside from 5 stocks. Let's go. I'm going to flag for your attention 5 companies where I believe their share price is at least a 100% upside within the next 5 years. 4 of them are actually on the thumbnail, but there is also a surprise company that I haven't yet mentioned on the channel. So if you stick around till the end for that one, see the surprise stock. We are starting with Alibaba as first stock. The valuation of the company has dropped dramatically recently. Their market cap's only just over 330 billion, and that PE is around about 17 with a forward PE of 13. If we have a look at the price action, they are pretty much at long-term lows. The 52-week low is $100 a share, and we're at 108, so barely above that 52-week low position. It feels like that could be a good time to buy if you're interested in the company. See, none of this is investment advice, do your own research. I'm just flagging 5 options that I think are significantly undervalued. Now, I've updated my discounted cash flow model for Alibaba, and here are the results. So based on a discount rate of 15%, which means I want it to double in 5 years, and the current share price and all the current free cash flow. So based on a discount rate of 15% a year, so that's the stock doubling within 5 years. And the latest view of free cash flow, I've come to a conclusion as to the latest value. And very conservatively, I've said they'll grow at just 10% a year in terms of their earnings per share, and also have a final PE in 5 years' time of 15. Very conservative view. And even with that conservative view, the intrinsic value per share is $132. So that means if they were priced at $132 in the market, you could expect, based on at least these calculations, a 15% a year compounded annual growth rate, so doubling 5 years. So they're actually currently cheaper than that if these calculations are right. So there's actually a bit of margin of safety. So Alibaba looks like buy number 1. Obviously, do your own research and have a look into that. If you want to know more, I do have a much more detailed video on Alibaba. And in fact, for 4 of the stocks here, I have already done a detailed video on them. So you can find the links in the description below to look at that detailed review of results. Number 2 is everyone's favourite, that is Boohoo. Now, Boohoo has absolutely had a pretty catastrophic action recently in terms of its share price. We're down at 84p, and we were looking at sort of £4 just over sort of a year and a half ago, and it's just been pretty downward trend since then. Now, I suppose you say, is the company, it's lost 70% of its value, so is it only worth 20% of what it was? The chance of losing money in this company in terms of risk of failure is very low. The balance sheet is very strong. They are still growing revenue at very quick rates. The earnings have taken a short-term hit. That should recover in due course. I've done a really detailed review on Boohoo, so again, there'll be a link in the description below for that one. The third one that I strongly consider buying, in fact, I have bought in the last few days, is some more shares in Dropbox. Dropbox is down at around about $22 a share. So I recently concluded my analysis on Dropbox about a week ago from the time I filmed this video, looking again for that 15% a year return. Very conservative calculation. And my intrinsic value per share for doubling in 5 years is 31. They're currently at 22, so there is some good upside there. So I'd strongly consider looking at Dropbox as one of your investment ideas if you're looking to double your money or more. Again, links in the description below for a much more detailed deep dive into their results and financials. Right, if you've made it this far to number 4, I'll give you the surprise stock. That is Redbubble. So I've not talked about Redbubble really before. I don't own a position in them, and I'm looking very closely. So the thing that brought this to my attention is it's a company that I've actually got experience with and have used. It looks like a good process, and they were trading up on the Australian Stock Exchange around about 7. They're now at 180 or so. So that's quite a big drop off, and it'd be interesting to see actually whether that is reflective of the company numbers. Now, first of all, the numbers for the company, they're looking at free cash flow of around about 50 million. Now, the enterprise value of the company, once you take into account all the cash on the balance sheet and very little debt, is actually 355 million. So that's just a 7-to-1 relationship there. So that implies a pretty strong rate of potential return. You look at free cash flow compared to enterprise value, you could get over 10% a year return on this stock quite easily. Now, next 5 years, analysts here have got 17% a year growth in earnings. So this all points to a stock, I think, that could quite easily double in the next 5 years, if not sooner. Just for a bit of a sort of a sense check, Simply Wall Street's got an intrinsic value per share of just over $5. Now that's based on a discount rate of 6%, so you would probably lower that for that sort of 15% position, but it does look like this is an undervalued company. And the other thing with them is there has been some insider buying in terms of individuals, at sort of this 170 or so price, multiple different individuals have been buying positions in the company. So I want to look into this more. Hopefully that's a good idea for you if you're not come across this one yet. And last but not least, again, this is a company that I hold a position in. This is InMode, and they are now at around about $44 a share. I reviewed InMode about 2 weeks ago, and based on my analysis, I thought they could be worth around about $61 per share in terms of a price that you could pay to get a doubling in 5 years. So they're quite a bit below that at the moment. Again, I'm looking at that one to add into position. Now, the challenge I've got is my cash position is quite low at the moment. So I don't want to then spread over the 5 companies that I mentioned and then have no cash, because if there is a market crash based on the geopolitical events or something else happens, we just don't know, then I won't have any cash to be able to respond to that. So I did buy some Dropbox. I'm just kind of trying to work out now the best portfolio strategy for how to look at these other positions and which ones to add to. So if you made it to the end, that's great. Thanks very much. And if you're interested in joining the Finance with JCL Discord server, you can access that via the Patreon link below. Really looking to smash those portfolio returns for a stock that could over double in the next 5 years. Do check out those video links on screen.